Yes, I do think it's going to be a very challenging September. Several things on my radar screen. I'm watching European sovereign yields,
Hmm.
and already today we've seen a clear linkage between higher yields and lower equity markets. And if that narrative continues, um, that could be a quite a moment for the stock market because uh, politically, France, Germany, England is a real melting pot today of populism. So that's very much front and center in my mind.
How bad or how problematic might it get then for investors? Like, how do you see it potentially playing out? And do you also anticipate? We mentioned your book, The Confidence Map, going into this, and we do think about what's on top of mind for investors right now when it comes to making decisions whether or not to deploy assets, to pull back, like what to do in this environment once again. And then we just talked about the trade, ruling on trade, whether or not all of that we've been living the last 5 or 6 months, comes undone.
Yeah, when I look at the population today, particularly on the investment side, there is a sense of invulnerability like I've not seen, certainly makes what we saw in 2021 look timid. Investors, particularly retail investors, believe this market is unsinkable. I saw somebody analogize it to Rasputin. This is an unkillable market. Both of those really trouble me because they suggest that investors think that they can continue to ignore the geopolitics around them. And I don't think that will ultimately prove to be the case. At the same time, though, I see despondence, particularly among the low end consumer. And I used to talk about the arms and legs of the K-shaped economy. Now I have to talk about fingers and toes because the clustering has become so extreme at the very top and at the very bottom. And that gap now appears to be uncrossable. And as we see over and over in history, shared powerlessness is something that unites those at the bottom. And so I think policymakers on both sides of the aisle need to be attuned to that.
Hey, Peter, we're getting some headlines from President Trump right now. He's speaking on the Scott Jennings radio show. He says he's going to appeal the tariff ruling. He said that he repeats that global tariffs are an economic emergency, and he said we'll see a reverberation if we don't win on tariffs. How in your view, should investors be thinking about this? Because you talk a lot about chaos and clarity, and I think there's more chaos than clarity. I think it's fair to say right now when it comes to at least the policy as a result of legal battles, as a result of, the back and forth with these lawyers, with these rulings. It's not necessarily clear what is happening.
No, it's not clear, but this is a continuation of very me here now decision making that we see on the part of the new administration. And I think that for investors, they've presumed that when markets decline, the administration will step back and pivot in their favor, the taco trade.
Mm.
And I think what's becoming reality is that those who are running businesses, and we saw this in the manufacturing reports earlier today, that they're really struggling with the uncertainty and powerlessness that they feel. And the result is, in those situations, as you would expect, they're pulling back on orders, they're making more deliberate employment decisions. And so the real economy, I think, is decoupling from the markets, and the markets believe that they ultimately prevail. And I think the real economy is about to show them that's not the case.
What's your take on the president in terms of watching the financial markets and his willingness or unwillingness to back off of policies that upset things? Because we did see kind of a 180 when it came to tariffs way back when or earlier this year. But how do you see that now, or how do you factor that in now, Peter?
What I see since then is a growing sense of invulnerability. And I see that politically, financially, economically. that the administration sees itself and sees its decision making as just irrepressible, that unopposable. And those suggest to me a level of insularity, isolationist that is increasingly decoupled from what we're seeing on Main Street. You know, it's very interesting to me that we haven't seen the president out doing rallies in this new administration the way he did before. And instead, he's very isolated in the White House and Mar-a-Lago and places where.
Why do you think that is? Because the energy of the rallies was something that a year ago we talked a lot about, and even up to the election. And we know he likes to even go on tour to celebrate what he views as wins. Why do you think he's been quiet about this?
My own view would be that he doesn't see it as necessary at this point. He's won, and so there is a sense that, you know, that support is no longer needed for him to be effective in his role. And I think that's a challenge, will become a challenge, because it's one thing to unify a crowd against a common enemy, in this case, former President Biden. The challenge is then maintaining that momentum and cohesion post-victory. And so it surprises me too, Tim, that we haven't seen him out there trying to sustain the crowd.
So, Peter, you know, in our next segment, we're going to talk a lot about what seems to be kind of the new axis of power, China, India, Russia. And I do wonder, as we talk about the U.S. seemingly or accurately or actually turning more inward and the rest of the world kind of moving on in new alliances, what does that mean for the U.S. financial markets? What does that mean for U.S. investors?
I think you're seeing not only the United States turn inward, but Europe turn inward.
Right.
It too is pulling back, and not only globally, but among itself. And so it's very interesting to me that we have a Western world that is increasingly isolationist at a time that the Eastern world appears to be coming together. Now, having said that, we're talking about three very dominant, independent nationalist leaders who today it is very convenient for them to create what looks to be cohesion against the West. But I wouldn't underestimate that if confidence drops in those geographies, they too will become very inwardly focused.
We're talking with Peter Atwater, President Financial Insyghts, Adjunct Lecturer of Economics at the College of William and Mary, and of course, the author of The Confidence Map. Do you not buy the images, what we're seeing in all the footage, the handshaking, the laughing between President Putin, President Xi Jinping, and of course, Prime Minister Modi? Do you not buy it? Is it just for the cameras?
No, I do buy it. I buy it particularly symbolically that it behooves them to demonstrate that they are cohesive against the new administration. But it's one of those cases where, you know, my enemy's enemy is my friend, and that is only effective so long as the three of them continue to see the Trump administration as their joint adversary.
Peter, before we let you go, just an update from you about a question that we first discussed back in March when you were on the program, when we asked if you believed the U.S. would be uninvestable. This was pre so-called Liberation Day. I'm curious if you think the U.S. is more or less uninvestable at this point now than it was back in the spring.
No pressure, but that response kind of went a little viral. I'm just going to tell you that.
Yeah, so I do believe that it is more uninvestable today than it was before in March. And my reason has to do with the substantial diminution of shareholder primacy that we've seen. The new administration has been very aggressive in pursuing nationalist economic policies. And I think that that makes the United States, particularly at these valuations, far less attractive than it had been.